Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty as well as on the different asset classes. Now, first of all, let us go to the Nifty daily charts and we'll try to analyze, what is the pattern showing uh, and how the pattern is forming and what could be the trend for the next week. Now let us go to the Nifty daily charts and see. This is the Nifty daily charts, and this was the pattern which have we have been observing since last seven trading sessions. One, two, three, four, five, six, and seven. Now this is the seven consecutive trading sessions where Nifty had ended on a negative note. Now, if we look at to the Fibonacci numbers, and if we the Fibonacci numbers are found 1 plus 2 is equal to 3, 3 plus 2 5, and 5 plus 3 is equal to 8. This is the way we identify or we come to the Fibonacci numbers. Now this was the seventh day. Friday was the seventh day of the fall, and eighth day is the Fibonacci number. Fibonacci numbers are very important in technical analysis. So it is just an theory. Now on Monday would be the eighth trading session. So if 8 is the Fibonacci number, we could see a trend reversal. I'm not saying trend reversal means that from 8th day it will start moving up, but on 8th day it might find a bottom. So looking at this particular pattern, it is into a falling channel. Definitely the pattern has been weak, but it is just closed below its 200-day moving average. This could be a crucial time for Nifty. The setup is oversold. RSI is also placed with negative signals. It is just near its major support. See, this is the gap area. It is just near the gap area, and it will be almost filled if there is a 100-point fall on Monday. So that could be the area where we might see a trend reversal or a counter rally from the lower levels. One should not forget, since last seven trading sessions, Nifty has been hammered down very sharply from 8,100 to 50 mark till 17,000 almost 400 mark. So definitely there are lots and lots of short position in Nifty at this juncture. So, advising or suggesting or recommending fresh short at these levels is not advisable. So, I would be recommending be cautious in short position. If you are having short, just try to book profits if there is a negative opening on Monday, because we might see a counter rally from the lower levels. Now, this is the daily charts, and as I said, uh, RSI is also negative, but if I'll just take this chart on the hourly basis, you can clearly see hourly basis RSI has entered into an oversold territory. RSI on the hourly charts is clearly showing some sort of positive divergence. You can see RSI is moving slightly higher and prices are going lower. This is a classical example of an positive divergence. So definitely looking at this particular pattern, I feel one should be cautious. One should not go fresh short at these levels. One should be cautious. Those who are short should try to book profits if there is a negative opening on Monday. And one should not forget that Dow Jones has also uh, opened negative. It traded negative, but there has been some shadow, some bounce back at the lower part of the day, the fag end part of the day on the Dow Jones. Let me show you the Dow Jones chart so we will have a clear view. See, this was the Dow Jones chart of Friday. You can see this was a trend line. It was broken. Dow Jones is also facing similar kind of selling pressure since last 7 to 8 trading sessions. It is also into an oversold territory. This is the daily charts, and Dow Jones has potential to test this particular trend line. So almost maybe next 10 to 15 trading sessions, Dow Jones might rebound to the levels of 33,600. Currently, Dow Jones closing is around 32,816. So almost I am expecting 800 point of rally in Dow Jones from the current levels. Let me go to the hourly chart of Dow Jones. You can clearly see in Dow Jones also. Here prices were going down, but RSI in Dow is also showing some sort of positive divergence on hourly charts. So looking at this particular Dow Jones and Indian markets, I mean to say Nifty, we feel that we might see a counter rally from the lower levels, so one needs to be highly cautious. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in Nifty for the next week is placed around 17,333. Below that, the second support is placed at 17,197 and third support is placed at 17,098. Whereas on the upside, the first resistance is placed at 17,599. Second resistance is placed around 17,777 and third resistance is placed around 17,924. These are the important supports and resistance level in Nifty. Traders should try to just closely monitor these levels and try to trade in the direction of the primary trend. Now friends, let us discuss the derivative data of Nifty. You will see on the screen the Nifty call option in open interest. The action in the Nifty calls was seen in 17,600 calls, 17,700 calls, 17,800 calls, and 17,900 calls, and then 17,000 or 18,000 calls also. Now here you can see there has been a rise in the volumes, rise in the open interest. Implied volatility is low. It is between 10.96 and 11.65. But there has been a, a significant drop in the option premium. That means that smart money has already done out of the money call writing, and looking at this particular data we feel that immediate barrier would be 17,600. You can see the volume, concentration of volume, and the open interest, rise in the open interest. Now this 17,600 could act as a major barrier. Once that is taken out decisively, we might see a sharp short covering from the levels, which might take Nifty towards the level of 17,900 to 18,000 mark. You can see this particular concentration has been seen in this particular next week series, a strong concentration of the volumes. So this could be the trend deciding level, what I call it, the trend deciding level. If Nifty crosses 17,600, then one should exit from Nifty shorts. So this is the observation which we have seen in Nifty call data. So now let us discuss the Nifty put data. In Nifty puts, you can see the action was seen in 17,400 puts, 17,300 puts, 17,200 puts, and 17,100 puts. Now here you can see the open interest was rising, the volumes are also rising. The implied volatility is also in comfort zone. It is just between 11.85 to 13.34, and there has been a very marginal drop in the option premium. Now this marginal drop in option premium, which is clearly indicating that smart money is not yet interested or not seeing or not having a view that Nifty might go further down from these particular levels, because there is no particular action seen in this particular option in any of these out of the money strike prices. No serious data has been seen. So definitely looking at this in this particular data, I will just put more emphasis on this particular 17,400 puts, where the concentration of volume is more. So 17,400 could act as a major support in Nifty in the next week. So if there is a drop in Nifty from the current levels, we might see a bounce back between 17,400 to 17,350 mark in the Nifty. So one needs to be cautious, and as I said, next week is going to be crucial. We might see the 8th trading day, which is a Fibonacci number. We might see a trend reversal or at least a technical pullback from the lower levels. Now friends, again let us go to the daily charts of Bank Nifty, and we'll try to discuss what we have observed on Bank Nifty from the particular closing of Friday. Let us go to the Bank Nifty daily charts. Now this is the Bank Nifty daily charts. Here also you can clearly see RSI is negative. It is with sell signal, but it has just touched. Let me just stretch this particular. You can see it has just touched the oversold area. It is not deep oversold, but it has just touched the oversold area, which is 30 mark. And if it deep penetrates in below 30, then it would become a deep oversold territory. But it has already entered the oversold region. Now let me discuss the Bank Nifty daily charts. You can see again in Bank Nifty also there has been a significant fall since last 7 trading sessions. Thursday was a doji with a long, I would call it as a long-legged doji. But Bank Nifty, let me put an important note over here. Bank Nifty is more stronger than Nifty. Nifty has closed to its weekly low, but Bank Nifty has managed to close to the above its swing low. So Bank Nifty, according to Nifty and compared to Nifty, Bank Nifty is stronger than Nifty. Now looking at this particular pattern, what could be the trend for the next week? So for that, let us go to the hourly charts of the Bank Nifty and we'll try to study what kind of pattern, what RSI is also showing. Now here you can see it's very small inverse head and shoulder pattern, or if we consider it, it could be a rectangular consolidation also. Now prices as flat, RSI is making higher highs. It is marginal, but it is making higher highs. So this is a classical example of a positive divergence. So as I said, Bank Nifty is also oversold, oversold from these particular levels. Thursday was a long-legged doji. Friday was a negative closed, but it failed to break the Thursday's low. So this is a very good sign for Bank Nifty for a counter rally from this particular level. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 39,600. Second support is placed at 39,419. Third support is placed at 38,949. On the upside, the first resistance is around 40,348. Above that, the second resistance is placed at 40,529 and third resistance is placed at 40,946. These are the important supports and resistance level in Bank Nifty. Now let us discuss the derivative data of Bank Nifty. You will see on the screen the Bank Nifty call data. Now in Bank Nifty calls, you can see the action was seen in 40,200 calls, 40,500 calls and 41,000 calls. Now here you can see there has been a strong call writing seen in this particular out of the money calls. You can see the drop in the percentage change in the option premium. There has been a rise in the open interest, rise in the volumes, and prices are dropping. That means there has been a clear indication or clear visibility of writing of out of the money calls. Implied volatility is between 14.72 to 15.21. And looking at this particular volume concentration, we see that 40,000, which is the psychological mark. You can see here the volumes. Look at the cursor. The volumes is high. If it breaks 40,000 and 40,200 decisively, we might see a very sharp short covering towards the level of 41,000 and 41,200 mark. So one needs to be very cautious at these levels. Bank Nifty, and I would like to say, Bank Nifty has failed to break its Thursday low. So Bank Nifty is stronger than Nifty. So this is a caution which I would like to share over here. So once Nifty breaks 40,000, then Bank Nifty breaks 40,000, then short sellers should try to book profits and go long above 40,000 mark. Then we might see a very sharp counter rally or a short covering rally from this particular level. So overall, looking at to the this particular data, we feel that markets are oversold. We might see uh, uh, arresting of the downfall, and we might see a counter rally from these particular levels. So now let us discuss the Bank Nifty puts. You will see on the screen the Bank Nifty puts. The action was seen in 39,800 puts, then 39,500 puts, then 39,000 puts. Now here also you can see there has been a no change in, there has been a very small change in the what we call as option premium. There is a minute change. Neither the smart money has started buying Bank Nifty puts, nor there is what we call as writing out of the money puts in Bank Nifty. But looking at this particular volume, we feel that smart money might be waiting for some sort of clear signal or a breakout above 40,000 mark, as we have seen the data of Bank Nifty calls. So this particular data just can be used as for support level. So looking at this particular concentration of volumes, you can see 39,900 and 39,800 where there has been a strong volume concentration, and even 39,700. So between 39,900 to 39,700 could act as a strong support area, and from those area we might see sharp short covering coming into Bank Nifty from those particular levels. So friends, now looking at to the charts and derivative data of Nifty and Bank Nifty, the clear view is that Bank Nifty and Nifty are oversold. The US markets, the Dow Jones is also oversold. It has also witnessed uh, positive divergence on hourly charts in Dow Jones. So even in US market, we might see a counter rally. So following that, first of all, Indian markets will open on Monday, and US markets will follow. So we feel that a counter rally could be seen from the lower levels. So buy on dips should be the strategy only for the next week for a technical pullback from these particular levels. Now, friends, let us come to the final segment of our show, which is positional call. I've identified one stock. The name of the stock is GSFC. Sorry, GSPL. Utah State Patronate. The stock has been consolidating. It is on the verge of a breakout. The price volume action is very strong. You can see on the daily charts. Daily chart of uh, GSPL. It has the formation of an ascending triangle, but still the stock is on the verge of a breakout. The breakout is just above this blue horizontal line. The breakout point is 284. The stock has potential to test the higher levels from this particular range. So positional investors, swing traders, investors can buy the stock or accumulate the stock in the range of 278 and on dips to 271 for an upside target of 310 in short to medium term. Short to medium term means next 3 to 4 months. The stock of the potential, you can see here the price and volumes action. Smart money has already bought, then the stock has never seen a sharp correction. It has been consolidating. RSI is also positive. So as I said, the stock can give a decent returns from these levels. Positional traders or investors can buy in the range of 271 to 278 for an upside target of 310 in short to medium term. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.